30, 40, 50-year mortgages. Oh my.
More coffee.
Yeah. It's the Bitter Realtor Podcast. We're talking about all things Los Angeles real estate. If it's got four walls and a roof, we're talking about it bitterly. Welcome back to the show. It's the Bitter Realtor Podcast. I'm your host, Joey Rockenstein, and sitting next to me, riding shotgun in the Bitter Realtor studio, Scott Goldman.
Hello, bitter people.
It's been a while.
A while?
Right.
How long?
A couple months?
I don't have a spreadsheet to figure
Right.
out. It's been a while.
You know, if anybody actually watched the show, they could have reached out and told us.
I think they did, but who's been monitoring the socials? Not
Right.
me.
We fired that guy.
Yeah, we had to. He was in Korea.
Unbelievable. We got to find better help.
Good things good on your end?
Not too bad. I would say that Q4, meaning the last part of the year, is fortunately my strong part of sales, because I always seem to pick things up and go full steam ahead. So things that I'm doing during the downtime kind of like come to fruition, I guess is the word I'm looking for, and things start happening a little bit. I wish that happened throughout the year, but I'm working on that.
And I wonder, because I've backed off my active portion of this lately. I haven't been so active as a realtor.
Because you're smart.
I've got other things going on. I mean, I don't want to brag, but I sold a TV show. And, oh, by the way, shout out.
Oh, boy.
Back-to-back World
Did you go to the
Champions.
parade?
I did not go to the parade, but I did go to the 18-inning game.
Oh, are you serious? Wow.
Anytime a game has 2 7-inning stretches, it was a long game. So, yeah, it was pretty amazing.
At one point, did they stop selling beer?
They have to stop selling beer in the 8th inning.
Right. And that
was
hard out.
it.
That's a hard out.
That was it. You couldn't get a beer.
At that point, you see people reaching into their bags and pulling out the little bottles.
The guy with the beer vest.
Does he still throw it like the peanuts?
He has like a hose.
Jack Daniels. Yeah, we'll take 2.
That's a big colostomy bag of beer, bud. Anyway, so I know you've been active, and you said you've been working with a lot of buyers.
Yes, I have been. So beginning of the year, mostly listings.
We got a listing behind.
This was one of them that I happened to sell at the beginning of the year. This some of my favorite clients right here, but you're all my favorite clients.
Yeah,
Rosie and Andrew, what they did was they bought this house in 2019, and what we're seeing here, this house was the only house that was on the lot. It's an 8,000 square foot lot. They went and completely renovated that one. It's a 3-bed, 2-bath. They renovated it, and then after that...
Did they add square footage?
No. But then, on this 8,000 square foot lot, they built this 2-bed, 2-bath ADU, which is about 800 square feet, and then they moved into that and rented out the front house. It was amazing.
Somebody will... send me a note on this, but that's a real Israeli move.
I mean,
do they got room for one more ADU on the property? Because they'll squeeze one on there.
Like the garage could practically be a junior ADU.
Yeah, I mean it's amazing what they can do with less than 1,000 square feet. These guys are pretty creative, To
get that 45%.
Yeah. Well, it seems to me that whatever they're leasing this unit for, they're offsetting their monthly by something agreeable.
Yes, yeah. And they're actually the smartest clients that I have, because this is like their MO. Like they do live-in flips, and so they move into it, renovate, build something else, live in that, rent the other one out. And so it had just come time where they felt they wanted to move on from Pacoima, and so they said, let's sell it. And the activity on this house was unbelievable. Like there were so many people, yes, neighbors too, but also people very interested in having this type of property because they know they can make income on it, so that they can live like in the back house and rent out the front house.
Is that how the seller's agent kind of put it out there, that it was an income property or that it had great potential?
So when you say seller's agent, you mean me? Oh no! Sorry, that's the
you were the buyer's agent.
right. I was get confused. I get confused with that terminology.
You're confusing me now.
Sorry.
Wait a minute. Did you represent the? You said that you're smartest. We started by saying buyers.
No, I said they're smart. Oh. Right. No, this was my listing. I'm not the smart one. Yeah, this was my listing.
Okay, so you were the listing agent.
Correct.
And who bought it?
So this wonderful woman who was represented well. She came in, she loved it. She knew that she wanted to live in the back house and rent out the front, and it was a match made in heaven for
Did
this
you
person.
double dip it? Or
I did
you?
not.
Okay.
Yeah. Thankfully, she was represented. Honestly, I don't like double dipping. I've done it one time, and it was like horrific. It just wasn't. I didn't like it at all. So, and it was on that Morrison house. So it didn't work out well.
You're going to piss somebody off.
Right. Somebody. It's just not. Somebody feels like they're not getting their fair shake. They're not being represented well. So I'd rather not do that. Anyways, long story short, we sold the house. My clients ended up moving on, rented it somewhere else because they wanted to find a different neighborhood that they wanted to try out. And actually, we are in escrow right now on a duplex, and we're going to close hopefully pretty soon with that. So they're going to do the same thing again. They're going to renovate. And then they're going to move into one of them and then kind of fix up the other one and rent that one out.
Listen, it's a great move, especially if you're a first-time home buyer, if you can figure out a way to offset some of your monthly mortgage by leasing an ADU, building an ADU. Obviously, the easiest way is to have a 400 square foot garage. You call it a junior ADU.
I think it could be. I mean,
I've seen some garage conversions where they put a second floor on it. Second story, and it's about $750 after that. So,
seen a lot of those.
Yeah.
But speaking of mortgages, there is some mortgage news going on.
This is a good dovetail to our next conversation.
The media is on fire right now because President Trump is proposing the idea of a 50-year mortgage. 50-year. That's 50. So
mortgage 50. Sorry, it just came to me.
So I would say that people are used to 15, 30 years. I know that Guaranteed Rate even offers a 40-year mortgage program, but 50 years. Where are we going to go with this? And is this a good idea for first-time home buyers who possibly can't afford to get into something right now because they can't afford the monthly?
So my question would be, first of all, it doesn't even seem feasible. Okay, you're a bit younger than I am. If I took a mortgage right now, 50-year mortgage at 60 years old, that mortgage doesn't mature until I'm 110. So that makes zero sense.
Well, you're not even going to mature at 110, so.
Well, that's a whole other show,
right,
dude. And why would you?
What?
I don't even want to get into the psychology of that one, but he's right. So the thing about that is, and you at the ripe age of 27, a 50-year mortgage, you're 77 by the time we know you're not 27.
Right.
So it doesn't even really make sense. Now, as we were talking before the show, you have a 30-year mortgage.
Correct.
And the best thing that you can do with a 30-year mortgage, as I did with my 15-year mortgage, was I threw a little extra at it every month.
Right. Because you want to be able to pay it down and not accrue so much interest.
Right.
Correct.
So if you're throwing a little bit extra at your mortgage every month, like $200, that's an extra $2,400 a year. Over 10 years, it's $24,000. It's pretty substantial because you're attacking that principal amount. So it's constantly bringing the mortgage.
But I would have to argue that people don't even complete a 30-year mortgage. Like, they don't wait 30 years and then decide they're going to make a decision at that point.
Which is why a 50-year mortgage makes even less sense.
But why couldn't you follow the same principles and philosophy with a 30-year mortgage to where you're going to refi out of it or sell and move up or downsize?
Well, that's exactly why a 50-year mortgage makes no sense. It's just bluster from a dare I say, a blusterer who's pretty well full of crap all the time. So I think it's just if it's the method by
Here
which
come the comments.
if it's if it's a method by which you're making housing more affordable, this is not the way to do it because it's still supply and demand. It doesn't matter that the mortgage is extended. I still need to qualify for the mortgage. You still need more housing. It's more housing is the issue.
So this episode, I'm going to play devil's advocate throughout.
Good.
So you talk about they can't qualify for the mortgage, but wouldn't the 50-year terms help them qualify for that, because the monthly is not going to be as high, and so the affordability is going to be better, considering what their income is.
You would think, but I would think an actuary or whoever is making the decision on this particular loan file is looking at everything. Like, now you just added 20 years to the term. How in God's name is anybody going to be able to cover the extra 20 years? So I think the bank takes on a whole different side of risk when they decide they're going to give somebody an even longer term. These things have been very thought out, I think.
Correct.
Right? There's a reason why there's a 30-year fix or a 15-year fix, and anything before that is an ARM, an adjustable rate. So if I want to get a 10-year note on my home and do it as an adjustable rate, fine, but they're only going to fix my rate at 15 or 30 years.
Okay.
Right? Are they going to fix my rate at 50? Because there's a lot of time in there for the rates to go up and down. I just play devil's advocate. I believe it creates a whole other risk component for the lender.
So obviously, this is not something that has been completely, broken down and thought out and put through the funnel of like what all the terms would be and what it would take to qualify for something like this. So,
well, let's assuming that those vetting processes are met. Let's assume that.
okay, so if you guys don't know, Scott does have experience in the mortgage world. So you're a perfect person, to talk about these kind of things. So what would have to happen for this idea to be able to be executed?
Okay, so I think if somebody wanted if it's a fixed 50-year, if the rate is fixed for 50 years, I believe that the buyer will have to come in with more of a down payment, like a 50% down payment.
Whoa.
Because I think the bank may only be willing to take a 50-year note and not have all that risk on their book. Well, let's go back. It's $1 million house.
Okay.
I want a 50-year fixed mortgage on 500 grand. So I've got to come with 500 grand. I think the bank can stomach that mortgage.
Ugh. But no first-time home buyer, or like,
Well,
very
it depends on
few.
but if they're coming with the money and they've got the job, the bank and the paperwork looks good, the bank has to decide, can they assume the risk of an extra 20 years? So obviously age is going to come in here. How old is this
Right.
borrower?
Right.
So again, I think it's a bunch of bullshit, and I don't think it can ever work.
Well, if somebody could afford to put down 50%, I would think that mortgage broker is going to steer them in a different direction regardless.
You would think if you could put
Right.
down 50%, put it all down,
Right.
and then go get a recap from somebody. But the 50, let's just back up. I mean, you think about it. What's basic? What's your approximate monthly payment on your mortgage?
It's approximately $5,600.
So let's just say it's $5,000.
Okay.
All right. Now, if you extended that out another 20 years, maybe now that $5,000 payment becomes $3,000, or
Correct.
in that neighborhood. I'm just quickly doing the math. Okay, that's fine. It makes it more affordable for you. But I could still see somebody like you going, well, if I'm going to refi to a 50-year, I'm just going to take an extra $1,000 and throw it at that thing and throw it at that mortgage anyways. Budgets are set so that people can afford a home. It's not the affordability, it's the availability. Homes are not affordable. We know that.
So,
Because there's not enough of them.
so this 50-year mortgage program is not going to magically create more inventory.
Can't. It's going to create less inventory.
Interesting.
You can go look at historically when rates change, right? So let's say rates went down 4 points tomorrow. Just
Okay.
boom, with the Fed, Schmucko took over the Fed and he went, okay, free money for everybody.
Right.
Okay? Well, guess what? What happened during the pandemic when that happened? It ended
It
up,
was a frenzy.
it was a frenzy, and you and I couldn't, we were representing buyers, we couldn't make a deal because people
Right.
like influencers were coming in with huge amounts of cash and buying everything.
Right. Literally, like, people were coming in with like cash to win over, and then they started going back to the direct underwriting to get the loan pretty much approved, so you can compete with all cash buyers. And then some buyers were offering free trips to Hawaii as part of the incentive to get the house. So I mean, I was involved representing a buyer, and there were 12 offers on the table. 12 offers. So what are people doing? Oh, let's just get rid of all let's just be contingency free. Let's just not go in with any contingencies at all, which is the worst thing
And
that you could do.
150,000 over ask in some
Right.
cases. You know?
Exactly. We were in escrow on a house. It was listed at 1.7. We were out of the 12, we were number 2, only because our loan was not pre-approved, and the first person's loan, not pre-approved, had direct underwriting approval, and the first person did. And so the seller.
First person was you, Deed, your person.
Correct.
Okay.
Correct. And so that's why you got to sign the goddamn loan disclosures,
Fuck.
please. But
You've got to come, if you're working with this guy and he's found you a home, you got to come like you're looking like cash. You got to look like, if you can't make an all cash offer, fine, but you better look like you got the cash.
right. We ended up being the backup offer. Long story short, the first person bailed, we got it, and now they have the house, and it's a beautiful house, and it worked out really great. Regardless, though, those people, some of the people who bought and overpaid are now underwater. So, is that going to help them, a 50-year mortgage?
There's a great story about this house in Tarzana, up Reseda somewhere, that Mark Anthony had to have, or more specifically, his wife had to have. And there were like 11, 12 offers on this house, and he came in $1 million over ask because she said, if you don't get me this house. And now he's stuck with this fucking house.
And he doesn't have the wife anymore.
Oh, no, he's got the wife, but they don't want to live there. He doesn't want to live there, and they can't sell the house.
Wait, Mark Anthony, wasn't he like married to J-Lo?
Yeah, but that doesn't mean he's got J-Lo's money.
Right.
J-Lo's got his money,
Right.
and Ben's money, and her money.
That's what you got to do. Just marry rich and then divorce.
Or be J-Lo.
repeatedly.
Just be J-Lo.
She's selling her house for $60 million in Beverly Hills. Oh, sorry, Ben's house.
Ben's house. Oh, boy.
Gotta look who's on title.
So, as far as the 50-year mortgage goes, I can't see how it flies. If they put it in there, and as you and I spoke before the show, it's just it kills an industry called the reverse mortgage.
Right.
You know,
So maybe explain a little bit about that first.
All right, so if you find yourself retired and your income is dipped and you're not getting the kind of money you're supposed to be getting, but you own the home, there are, I guess they're lenders. You have to find a reputable organization that's willing to essentially buy your house and just let you live in it. And let you live in it until you perish.
Right.
And that could be 30 years. That could be 10 years. That could be 3 weeks. But the people that lent you that reverse mortgage money, they get your house when you pass away. So if you've got heirs, kids, the like, they are out of luck. So
But don't they have an opportunity to pay off what is owed?
they have the opportunity, but if you're already on a fixed income, and unless you listen, if you went out and you won the lottery because you're willing to risk $5 2 times a week,
Right.
and it paid off, okay. But I don't think in my career as an agent I've ever seen a reverse mortgage paid off.
So essentially the option is to sell.
Yeah, because you're not going to buy your house back. They've already given you a ton of coin to go live your life.
Got it.
So
Well, devil's advocate again, thank you.
yeah.
So if the reverse mortgage is crappy,
Yeah.
essentially to have, wouldn't the 50-year, why would the 50-year killing the reverse mortgage be a bad thing?
Because the reverse mortgage, well, the first part about the reverse mortgage is it gets the homeowner out of trouble.
Okay.
If the homeowner finds themselves behind in payments and they're not just behind in mortgage payments, but they're behind in their auto payments and their medical payments and their a number of payments. The cash that comes out of the register or the house alleviates that.
Okay.
So that's very important. It also puts money in the homeowner's pocket, and they don't have to move. So I don't know that the 50-year mortgage keeps people out of trouble.
Got
And,
it.
and if you're going to kill an industry that's there to help people get out of trouble, what happens then? Because the bank's not going to swoop in all of a sudden and give you the reverse. They're going to get you out,
Right. Get out of here.
and we're going to sell it because we've got first position on it.
Right.
So, it's touch and go. I don't know about a 50-year mortgage. I don't even like 30-year mortgages, but that's my own.
Really?
Yeah, I think that's my own experience.
Okay. That's really interesting. You know what? Let's pull up some of the stats that
Let's do.
we have for a market update, and maybe even like see if there's a correlation with the 50-year
Let's
mortgage.
do. All right. So, we're a green screen. Look at us. Let's go back to where we
I
were.
look good in green.
Yeah, good in green. Okay, hold on. There we go.
There. All right. Thank you, chat.
Thank you, ChatGPT. So, this is what Sherman Oaks data, right?
Correct.
Okay. So.
Is this up on? Yeah.
Yeah, you're up.
right?
We're up
Okay.
on program now.
Okay.
So go ahead and what do we got here?
So we're looking at in Sherman Oaks here, the home prices and supply. So median sales price for all home types recently is around 1.55 million.
Now just stop. The median home price in Sherman Oaks is 1.55 million, up slightly
Right.
year over year. The chart just keeps going like that, folks. I'm sorry, but I gotta point it out.
Like this is the conversation that you have with your buyers though, because I've come across so many buyers, and I don't blame them for thinking this, but they're like, the market's going to crash, home prices aren't going to appreciate anymore, it's not going to go up. I mean, they've gone up at least 2%.
At least 2%.
Yeah, and that's very conservative, right?
I mean, I knew a guy who was buying everything that he could buy and then living in a hovel. Now he's 50 some odd years old. He's loaded. He still lives in a hovel. That's his thing. But he owns property all over the place, and he is retired, and he just has income properties. I think he's got an income of about $100,000 a month just on his real estate, which I
Wow.
think is all he does. And it's amazing to me that he started so early. Now, he'd be the first one to say that I hate my tenants, it's a pain in my ass.
Right.
Right, okay.
Yeah.
Yeah.
We get it. But still, it's passive income. That's pretty
Very
pretty-
passive. All right, so
Right.
let's get back here.
Right.
Yeah.
So, that medium sales price, yeah, it's definitely high, but, welcome to Los Angeles. So, we're saying, the median list price has been slightly higher in some areas. I like how chat uses the word segments. But,
Segments.
yeah. So we're coming in at 2.495 million. The price per square foot on that, $869.
870 a fucking
Right.
foot.
So this is interesting, and I have some experience going on with this price point right here.
Okay.
Because I have noticed that at 2.5 million, 2.5 million, the houses in Sherman Oaks, if it's not completely redone, those are the ones that have been sitting on the market for well over 100 days. I can't even say it, it's so scary. Well over 100
Can't even
days.
say the word 100.
Yeah, it's insane. Insane. And what I've encountered as well is these sellers somehow are unrealistically okay with sitting on the market that long because they think their house is worth $2.5 million when they have a pink bathroom.
It's listen, sellers are dullards. Sorry, but we're just going to say they don't understand. Yeah, I've got two properties I'm about to list in Sherman Oaks. They're right next door to each other. They're owned by the same people. They lease one, they live in the other. They've lived in the other for 40 years. The guy bought the house when he was 17. He was a child actor.
Wow.
and we've looked at the numbers, and what makes the most sense, because they want to move to whatever, San Ynez.
Right.
What makes the most sense is that they sell.
Oh, do you want to click back?
Sorry. The thing that makes the most sense. Thank you for being the director today.
Go with one.
Yeah. Thing that makes the most sense is that they get rid of the residence they live in, take their tax base of like nothing to their multi-million-dollar home in San Ynez that they want to live in, and either sell the other place because they need the coin,
Right.
or continue to lease it, which I know they're driving $7,000 a month out of this place next door to them. So I got them that house. They paid $1 million for it. The comps I ran for them the other day, they've owned the house for 2.5 years.
Okay.
$2 million
Nice.
for the comps. Their house, which is bigger on a slightly bigger lot, even though it's next door, $3.2 million. It has a pool. Now, what are they going to do? He's decided, as he meets with his accountant, that he wants to have the low tax base where he's going.
Okay.
So they are going to have me list the residence that they live in, and they want to keep the other house leased.
Right.
And he wants to go, because he still needs to be in town to do business. He sold his business. He wants to then get a modest townhome in the city, like Century City, that he can operate out of when he comes to town.
Okay.
So now he's thinking like a millionaire, because he's a millionaire.
Right.
All right. Sold his business for a lot of money. And I love the fact that he is now looking at the possibility of paying an incredibly low property tax on a home he's going to live in, and the house is going to be like $5 million.
Wow.
But his property tax will be $3,500 a year.
That's crazy.
It's crazy. Or he could lease out the house he lives in with the low tax base.
Right.
But
I also liked how you mentioned a modest townhouse in Century City. I don't think I'd use the word modest for Century City.
you wouldn't.
No.
What,
I don't know.
What would you use?
Extravagant.
Extravagant Century City?
Yeah. I mean, I could just the price points down there. I mean, I haven't looked it up, so I'm not very familiar with price points in Century City. But I would think that there would be,
I found
Up
him a
there.
townhome,
Oh God.
1,500 square feet. The only thing that's expensive really about it, first of all, the place needs a lot of work. It's fucked up on the inside, but it's beautiful. His mortgage would be the same as the HOA, so that's the problem.
Wow.
But he wants it, and the company says it's going to pay his fees. So,
Well, there you go.
because he's got. I don't think the company goes ahead without him right now. It's not like when people buy your company, they don't just want to see you, on the beach with your umbrella sticking out of your cocktail.
Right.
I don't think they want that. They don't want you just tossing them the keys and going. So he's built this business up. He makes cars, and he's good at it. So,
I mean, that's the way to go. I mean, if you can tolerate being landlords, or sorry, housing providers, that's not even the right word.
Oh, that's all right. You got it.
That's the way you make the money. Let's wrap this up because
What do we got here?
let's just go with the days on market because the Sherman Oaks days on market. Chad says it's 55 days. I'm going to argue with Chad on that one a little bit and say it's a little bit more than that.
What are you going to say?
I would say we're pushing over 70.
We're at 70. So those two comps for their homes that I was just talking to you about, one comp sold in 2 weeks, the other comp sold in 6 days.
Wow.
So
Priced correctly.
I was shocked when I went into the MLS and I was seeing this, as was he when I sent it to him.
Right.
I would have had no idea that his leased home is a double from what we paid for it. And I had no idea how low his tax base was. And this is why I encourage you all, realtors, Realist is such a great resource for you. You can see the history of everything too, so you can really help your buyer and your seller understand. It blows their mind when you go, well, here's what you paid
Right.
in property tax last year, and you just know.
Right. And that's smart that you said that because I've seen so many in Realist property taxes jump quite significantly when it was really low for a long while. So-
Right, because the state of California assesses the crap out of us,
Right.
right? And
So that's a great tool to use because you need to see that information so everybody is on the same page of what's been going on.
well, it also adds to your credibility. Like when I call my client up and I go, well, I said, do you remember what you paid for it? He goes, no. And I said, I'll tell you. And then I call him 10 minutes later, okay, you paid $375. He's like,
Right.
yeah, you're right. And I said, you paid $375 and it's worth 3.5. He's like,
There you go.
Right.
You're welcome. You're welcome.
Right.
Oh,
Okay, so what have we learned?
what did we learn today? So the 50-year yay or nay could be a yay.
Why don't your picture come back up?
Let me help you with that.
I like
By
the
way,
video.
It's 2:24 on
Wednesday,
afternoon.
November 12th.
Traffic was really picking up there. So I would say the 50-year mortgage, I mean, I honestly don't, I feel like, there's several negative things about it. It has not been put into the funnel to kind of like tweak things, and adjust things to make it work. So it's going to be one of those things like you got to see what's going to happen down the pipeline.
I mean, you're right. If it's a wait and see thing, we'll see if the banks bite on it. They'll have the final say. If it's going to become a governmental program, forget it.
If you guys have any questions about anything that we talked on this show, put it in the comments section and we will try to answer that stuff as Scott points to a beautiful house that I sold.
Well,
Yeah.
there's also a placard up here with all of our
Right, there it is.
socials
Yes.
on it.
Yeah. If you guys love this show, give us a thumbs up. If you hated it, I dare you to give it a thumbs down because you can't anymore. YouTube removed that.
That's right. There's no negative spoilage going on.
Sorry, they want all positivity on YouTube
That's it.
now.
Like eBay.
You guys can find Bitter Realtor on all streaming platforms. It's on YouTube, it is on Spotify, it is on Apple, wherever you stream,
Insta.
we're there.
Insta.
Instagram,
Insta.
yeah, not really streaming, but you can see clips there. So
Twitch.
follow us on Instagram.
Twitch. You're the one who always announces like every gaming platform.
Right, but I don't want to go down the line. People know where they stream their platforms.
It's we do both. We're going to do both the Bitter Realtor, and then we're going to also do Grand Theft Auto 7.
There you go.
Okay.
I love that. You can find our contact information in the show notes below, guys. For Scott Goldman, I'm Joey Rockenstein. This is the Bitter Realtor Podcast. Why am I bitter? Because I'm a realtor.